All right. Well, welcome back to the Market Day Report. We have things off and running on the futures trade, and just like we saw overnight, we are seeing extreme weakness in the grain trade as we get things rolling here today. There have been some heavy rains reported in parts of the western Corn Belt, and it sounds, as Joe King was just reporting here, that we could have chances of rain in many areas of the Corn Belt in the next day or two, maybe chances of some severe weather in the northern half of the Corn Belt, taking a lot of weather premium out of that market right now. Let's take a quick peek at the futures, and then we'll go to the phones here. And we'll take a look at the corn first. In the corn market this morning, it opened up roughly about a dime lower. Right now, we have July down 10.5. We have December down 10.5 at 438.25. That is, of course, your new crop month. In the soybean trade, July is currently down 15.5 at 11.44. We have November down 15.25 at 11.33 per bushel. That's already a dime off of its high from the overnight trade. On the wheat trade in Chicago, July, we're down 4 cents at 477.25. In Kansas City, we have July currently down 6.25 at 454.5. And in Minneapolis, wheat, we have July currently 5.25 lower at 534.5. Meanwhile, in the cotton market, overnight it was higher. We still are. December cotton, the new crop month, is 51 points higher at 66.43. Let's go to the phones. Bring in Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. Dewey, good to visit with you once again. Thanks for joining us on a Monday. And this is Weather Market Monday Part 2, Chapter 2, as I call it. And this time, what they put in for weather premium on Friday, it looks like they're taking it all back out of the bank here today.
Yeah, that's exactly right. You know, listening to the weather summary there, we're looking at some scattered showers here for this week, and of course that's going to help a lot of guys here, and we've got some corn that's starting to tassel here, so we get a shower or two. You know, it's going to help pretty much make a crop.
Yes, Joe King was just confirming that. He was traveling right through your area there in the last couple of days, and he said he saw quite a bit of tasseled corn in Kentucky already. Of course, they're a little bit ahead of the curve, perhaps, when it comes to the majority of the Corn Belt. I believe he said in Indiana the corn was probably about waist high, something like that, not that far away anymore. A lot of the Corn Belt will probably be tasseling by about the 4th of July, typically. So as we look ahead here, how do you handle a marketing plan, Dewey, when you have a forecast that's calling for maybe scattered showers here and there? It's going to be that kind of hit and miss variety. So some guys will be able to cash in on a good rain. Others will miss out and their crop will suffer there. How in the world do you do your marketing?
Well, first of all, you have to look at your own independent situation there. You can't compare yourself to others throughout the Corn Belt. And you got to look at, obviously, what your bottom line is and so forth, what you need to have here as far as to stay in business for the next year. That's first and foremost. That's what the commercials do.
Dewey, there's a lot of outside market reaction going on today, too. A lot of it has to do with Britain, apparently, and their vote coming up Thursday, I believe, to exit the European Union or not. The U.S. dollar has been making a sharp move here early this morning. It was sharply lower. Meanwhile, the crude oil market was sharply higher this morning. Right now, we're down roughly about 700 points. In the September U.S. dollar, how much impact will that have in the grain?
I don't think it's going to have that much impact. I think it will eventually come to be supportive on the grain here for a while, but the dollar's in a correction here. I look for the dollar to eventually go and set some new highs. I could see the dollar index up about 103, 104, 105 here in the weeks and months ahead, and eventually that's going to put a little pressure on the grain.
All right, well, Dewey, we're going to pause for a little break, and if you would, I'd like to have you stick around. We'll talk about the cattle and hog market activity as well when we come back. We're talking with Dewey Strickler, and we will be back in 1 minute. Well, now it's time to go back to Franklin, Kentucky, and talk with Dewey Strickler of AgWatch Market Advisors. This time we're going to talk about the livestock trade. Dewey, the news that we got off the wire this morning was talking about the cash cattle trade out in the plains. It was not all that active. I do have to put that in there as a caveat. It was not all that active Friday, but boy, it was way lower than what we had a week previous. Some analysts were telling me this morning that we had cash cattle trade as much as $15 lower. That can't be good for the start of the livestock trade. However, let's take a look at the live cattle market. We'll take a look at the futures here, Dewey. Right now, on the August contract, we're down only 33 cents at 112.22 per hundredweight. We have October down 27 at 112.38. Feeder cattle trade, the August contract there is down just 32 cents at 137.10. September down 27 at 136.38. So, Dewey, is the bearishness factored into the cattle complex already, and or is a lower grain market helping out this morning?
Well, I don't know if the lower grain market is helping out. I don't think all of the bearishness is factored into the cattle. We still got some seasonal declines to go through in beef here, and also we're looking at increased production going into the third quarter, so I don't think we've seen the full emphasis of that on the market here yet. I could see the cattle still edging lower, going down into some new contract lows basis your August contract.
Yeah, I was just going to say, on a chart, I was looking at an August live cattle chart this morning, and it looks like we're getting really close to those contract lows. In fact, it looks like they may make a pretty good run at taking those out here sometime soon, at least technically speaking. On the other hand, I was looking at a lean hog chart on the August contract, and this morning it looked to me like that uptrend is still intact. And I don't know if they're really in danger of taking that out or not. Let's take a look at the lean hog futures here this morning, see how they're starting on the week. On the lean hogs, we have the August contract down 56 cents at 88.62. They got down as low as 88.55 and as high as 88.98. Now, last week we got up just within about 3 ticks, I believe, Dewey, on Friday of touching 90 bucks in the lean hog market. Technically speaking, how healthy is this lean hog trade relative to the health of the cattle market right now?
Looks to be a whole lot better when you look from a technical perspective only here, like basis of the July contract. Looks like the hogs will go up and set some new highs.
What about the retail and wholesale demand? The cutouts were sharply weaker again on the beef side. Looks like on the pork side there, and they were up 62 cents on the carcass values last Friday.
Well, when you look at the numbers here, production is looking to be a little bit higher, also an increase in third quarter production. That's going to, I think, offer some headwinds, but technically the market looks pretty good on the hogs.
So what's happening with the carcass weights on the cattle and the hogs here lately?
Well, when you look at the carcass weights here, of course, we've had, hot weather and so forth. That's going to bring in some lower carcass weights because of the heat and so forth. And I think eventually at some point down the road that will play into the market, but not just yet.
So if you do see a big weather rally shape up here around the 4th of July in the grains, are you concerned about the livestock side?
Not really here. I think that the grains are more or less sort of shopping around for a top. I don't think we've quite seen it yet, so I think, that will still play into the livestock for a little while longer.
All right. Well, Dewey, as always, good to visit with you. Thanks for the information this morning. Dewey Strickler with AgWatch Market Advisors, and, of course, he is based in Franklin, Kentucky. So a weaker start, Janet, on the livestock side here, at least early in the going on a Monday.
It's going to be tough to be quite as eventful as last week was.
And the grain markets are weaker, and the dollar sharply weaker. And remember, they have that Brexit vote,
right,
whether Britain will leave the European Union on Thursday.
Okay, thank you very much, Marlon.